Welcome back. Today I would like to talk about this company. This is LB Brands. LB popped up today as a short candidate, and you can see that the sector is in short mode. The selling bias for this company is higher than 10%. Large players have been selling, and the most important thing here is that on Friday you had a little down gap here below support. You see you had a support. So the question is, should we sell a continuation of the downtrend here after the down gap, or should we sell a bounce? Okay, so let's first go to the price chart here. Okay, you can see that LB brand was in an uptrend here and now start a small downtrend. That is basically what we can say here. If we go to the breakout calculator, here it is, we can download the data. LB, this is for short trade. Okay, so the first test is to see if we will have a continuation of the breakdown of Friday. You see here on Friday, here on Thursday. On Thursday we close at 84.5, and then we open on a small breakdown of 84, and then we close much lower on Friday. So to test if there is a continuation, first I have to test how we would have measured a breakdown by Thursday, by the data of Thursday. So I erase one line here. Okay, and now I will test a breakdown below 84. You see the low was 84. I want to test a breakdown below 84. Okay, I will put 2.5% stop level. I will take 300 days for a breakdown. Breakdown here, and I forgot the price. I see 84. Okay. I type 84. So you can see that the risk return ratio is very negative, so it didn't work well on a normal breakdown. I will test a breakdown on volume for the same price at 84, and this is also negative. So basically the probability that this stock will continue lower from here is limited. Okay, let's close this and come back to the price. So what we did was to test, you see, after a breakdown here on high volume, like here you have a lot of high volume breakdown, you can see you had a pullback, you had a bounce all the time with a bounce. So this means that most probably here we could also have a bounce. That is what the breakout calculator was telling us. Okay, so before starting to analyze the possibility of shorting a bounce, I would like to go to the supply indicator. I will click on the supply. It's here. Yes, okay. The supply indicator shows two things. As a reminder, just a reminder. Here you have a volume histogram of the last 200 million shares that have been traded for about 160 days. Here the dollar mark is the last close. You have the LB, UB and NB, which are the active boundaries, which basically define the trend. This is the lower level of the trend. This is higher level of the trend. Okay. And when I look at shorting a stock, I want to short the stock that is on the left side of the neutral boundaries, which means that the average traders are losing money, and the stock price is going down, means that as the stock price is going down, more traders want to sell their share to cut losses until we reach a lower boundary, and usually at that point you have bargain hunters who could come in and buy the stock. But at this stage, you see if the price goes down, these holders will start to want to sell. These holders could also sell, but they could also be stuck into the stock because their loss could be much higher than 20%. So, okay, what I want to show you is how LB and UB are calculated. So I go back to this chart here, and in fact I have cropped here before. Yes, it's here. Okay, these in blue you have the envelope calculated by the breakout calculator, and what I want to show you here is the trend. You can see here that a new downtrend is starting. Okay, so it's about this downtrend reach about 80. If you come back to the supply level, which is here, you see that the lower boundary here is about 80. Okay, so it's a right price, but the higher boundary here, if you draw the line here, you see it's not 94, it's about 86. Why does the supply level indicate that the upper boundary is 94? Simply because the software has decided that this line offer a higher probability of a long-term trend. So before, you see, we were in an uptrend and the line was here, the uptrend was up. Now we are changing, and most probably in the future, as this reference level, this pivot level will disappear, we will start drawing this downtrend here. So basically, the most important thing to have in mind is that this is the target covering price if we enter a short. Okay. The second thing is that we should short within the envelope, not outside of the envelope. Here you see we are not outside, but we are rather low, rather at the bottom of the envelope. So now let's try to look at the breakout calculator and see how we can evaluate shorting LB. So I will short LB, which is short trade on a bonds. You see I will short it on a bonds to, let's take 1%. The most important here is the number of days of the probability evaluation. You can see that the trend here was about 1, 2, 3, 4, 5, 6 months, which is about 120 days. So I will use this 120 days and start calculating shorting a bond at 1%. So we can see a very good risk reward ratio, but the probability to hit that entry price is only 4%. Let's look at the sensitivity analysis. Sensitivity analysis will tell us the entry range, and the entry range is here, is between 85.8 and 83.7. Okay, let's see what this gives on the chart. Okay, it's here, so you basically can enter around here, which is a quite wide entry area. So if you are eager to short the stock, then you will short as soon as we enter this short zone. But if you have more patience and you believe that we will have a bounce to the top of the envelope, then you might wait a few days and hopefully get a better entry price. So for me, tomorrow I will most probably short the stock if you have a bounce quite early in this area, maybe around 84. Why? Because simply I already have too long positions on the portfolio. I already have 40% on the portfolio that is on the long side, and I want to maybe have a neutral position, so I will probably short this stock as soon as we reach that short entry price. Thank you.